Joining me right now is former White House Director of Economic Policy and the author of The Price of Prosperity, Todd Buchholz. Todd, good to see you.
Good to be with you,
Thanks so much for joining us. So what are your thoughts on this? Pulling out of the TPP means those countries may do deals themselves with China, no?
Well, the fact is the U.S. is still the world's biggest market, so they still want to come here. So the prospect of bilateral deals, at least with the larger countries, I don't think is so tough. Let's face it, prior to the TPP, tariffs have been coming down ever since World War II. So it's not as if pulling out of the TPP suddenly puts us in some sort of zone where tariffs immediately rise up. They don't.
Well, when you say the U.S. is still the biggest market, you mean the most important market? I mean, you got 1.3 billion people in China, you got 1.1 billion in India, and you got 300 million in the U.S. So when you say this is the biggest market, what do you mean?
I mean, we're wealthier than those countries you just named.
Okay.
So they've got, the Chinese obviously have a great stake in selling goods to our country. And look, if you were Donald Trump and you believed you were the world's greatest negotiator, why would you leave it to all of President Obama's negotiators to do that work for you? The fact is, President Obama, like other presidents, tried to leave his presidency with monuments to himself that were not deserving of being built. Obamacare was rushed into practice so he could have a monument. The Iran deal, allowing Iran to have nuclear weapons, was rushed in without proper assessment because he needed this monument to himself. The same thing with the TPP. Other presidents have done similar things. It's not so surprising. Donald Trump feels strongly he's the world's best negotiator. Well, by God, this will be his chance to show that to the world.
Todd, what about NAFTA? Can that deal be renegotiated, and what can we expect to get in talks with Mexico?
Well, I think that's going to be a tough one. It sounds as if the new Trump administration is going to ask for some methods to rebalance trade, because we have had a rather consistent trade deficit with Mexico. And it sounds as if he may be identifying some products, and certainly automobiles is something he's been talking about, and he got a lot of publicity with Ford Motor Company a couple days ago. So I wouldn't be surprised if there's some serious negotiation about exactly how many cars and how much are they worth, and gosh, isn't there something we can do to make trade be more balanced? And by the way, I should point out, the real problem we're facing is the credibility around the world of the concept of free trade. So if Donald Trump needs to go a little slower on free trade, pull out of TPP in order to convince the American people that done right, free trade makes people wealthier, then it may be worth going a little bit slow.
What if there's the opposite reaction? We've had every major market gauge hitting a record high yesterday, first time since late 1999. But if you pull out a TPP and the markets don't have such a great reaction, would that put the brakes on the agenda that Donald Trump has laid out in terms of renegotiating all these trade deals, including NAFTA?
It's a good question, but the markets already know. Donald Trump promised TPP wasn't going to happen. Look, if Hillary Clinton got elected, she said it wasn't going to happen either. So the markets are well aware that free trade is on a back foot.
She flipped on that.
Well, and the markets change their minds about how they feel about certain things. And you get closer, and you start hearing from companies and individual business owners about how the lack of a trade deal with Asia is hurting their business. I'm just saying that you don't count that out.
I think this is the more the near-term risk. The U.S. dollar is getting very strong, and some folks think that's a great thing. U.S. exporters are concerned about that. So the question is whether companies like Boeing and Caterpillar start losing sales because they can't compete with the stronger dollar against Airbus and against Komatsu and Japanese manufacturers. That we may be getting that soon, and that may put a little tap the brakes for the shares of export companies.
So what are your thoughts on the overall economic plan out of the Trump administration and the market reaction?
I think two things are going on. First of all, the market reaction is recognized that lower corporate tax rates are a good thing. In fact, the Wall Street Journal today had a big headline about there's a race among countries now to reduce corporate tax rates.
Theresa May proposed it yesterday.
That's right.
In the UK.
So it makes sense. If you've got lower corporate tax rates, that's certainly good for after-tax profits. Deregulation looks like a good thing to businesses and makes a lot of sense. Now, we really haven't yet gotten a serious discussion with House Republicans about tax policy and individual tax cuts.
But it's a similar plan.
It is a similar. The House Republicans are going to try to discipline the Trump proposals so the numbers are a little bit lower.
Well, certainly on infrastructure.
How about China? Trump talks a lot about Mexico, but isn't China the real trade problem for the United States?
Well, it is where there's a larger trade deficit. It is where there's intellectual property thievery. And in my book, the new President Trump should take a hard line with China. It's ridiculous that we allow them to rip off intellectual property and to do so sometimes under the aegis of the Chinese government.
And we've allowed it for years. It's pretty extraordinary, actually. Todd, great insight.
Put down the chopsticks and let's pick up American tools.
As always, good to see you, Todd. Thank you so much.
Good to be with you.
Todd Buchholz there.